What are your views about this behavioral bias playing out in an investment practice, both from a competition and a life investment perspective?
Kaiser, you're totally right in saying that it's stupid. Buying any stock just by the sheer name is not a strategy. And
Okay.
coming to the stock market with any kind of emotion, may it be the fear of missing out, may it be the greed to get rich quickly, trust me, it's better that you just take that money and give it to a friend who has a weird dream like colonizing Mars or something, Uh, no references
We all have
intended.
a friend right now busy colonizing Twitter before he colonizes Mars. But that's a whole other story.
Yeah. So you have to understand that the stock market is so volatile that your first aim is never to make profits, And I love to give this analogy. All of us has played Mario when we were kids, right? How many of us had the thought of going and winning over the princess at the end? Nobody, right? We were all always focused on dealing with the turtles and jumping on the threads and avoiding anything. The difference between Mario and stock market is that in Mario you just lost the virtual life. Here you're losing your hard-earned money on which you've already paid 30% taxes. You cannot afford to lose any more money. The whole objective of coming to the stock market is to grow your existing capital, which has
Yeah.
already been shrunk thanks to the government, right? Uh,
It's a
so,
grim view to
like,
take, Kavita.
there is no way you should allow, like, once you start thinking of the consequences, the discipline automatically kicks in. And the secret ingredient to succeed in the stock market is discipline. A lot of people start
Absolutely.
buying a lot of stocks just because they heard some colleagues, some TV analysts saying that this company is so well positioned to take advantage of this Gati Shakti or whatever new scheme that the government is bringing. None of that works. You have to be risk averse. You have to protect your capital from erosion. And when you're doing that, for me, even though I enter stocks with a risk reward ratio of 3, I am not adamant about selling the stock only when the target comes, but I am very adamant about getting out of the stock when the stop loss hits. And this stop loss that I maintain is continuously trailed with my positions, and if the trailing stop loss is triggered, I am out of that position. There is no way, there is nothing that can make me stay in the trade after that point.
But how long did it take you to come to this mindset, being able to get rid of your positions? Which, I mean, I used to trade. I started trading. I remember 2004, and in my early years, I remember how upset I'd get if I had to get out of a trade when I did not want to. You know,
Yeah.
it. And today I learned that this is called the endowment effect. But how much time did it take for you to kind of get out of that mindset of, okay, let me wait and see, it might just turn around, let me ignore my stop loss for a bit, adjust a little more, and then hopefully it turns around for me.
Oh yeah, I have done all of those rookie mistakes. Like, name any mistake in the book of a full-time trader, and I have committed it time and over again. It's just that for those mistakes, I have not taken them as losses. I have taken them as fees that I've paid for lessons. And I personally am a very emotional person. Okay, like all my friends, my family, they know ki meko, like you tell me a word and I will start crying, and that's the kind of person I am. So you can imagine when I started losing money in the stock market, that was hurting me so much that I couldn't sleep at night. So then I had this urge to go back to my trades and study the what was I doing wrong, and that is how I started trade journaling. And that is what has made a huge difference in my quality of trading over the last 5 6 years. And it's actually over the last 2 years that I've made a huge difference because I started trading full time. So what I basically do, I maintain a tracker where, like everyone else, I don't know if people do this, but they should. I maintain the date I bought the stock on, the name of the stock, the quantity, the cost, and then I have a little field called remarks, which is equal to 3 columns. And there I write, why am I buying the stock? And then there is a column for stop loss, there is a column for target, and then there is also a column to see whether I have updated the bracket order for these particular levels. And I hold myself accountable to maintain this tracker entirely. And every three
Right.
months, I go back and study the trades which I closed 3 months back. The reason for doing this is that a lot of times, even the trades in which we earned profits may have been bad trades, whereas the trades in which we made losses may have been good trades, just because of
Right,
the
right.
execution. So when we look for patterns, we're not just looking patterns on the charts, we're also looking for patterns in our execution. And it is our responsibility to make sure that we retain the good patterns in our own execution and get rid of the bad patterns.